If you'd like to learn how to squeeze profits out of the Forex markets with a strategy that's got over a 90% win rate on your personal or funded Forex trading accounts in as little as 2 weeks, then look no further. In this video, I'm going to be letting you in on a little known secret which professional Forex traders use to make money on both personal and funded prop firm accounts on a consistent basis. So keep watching. Correct me if I'm wrong, but after my years and years of study, research and trial and error, I've come to the realization that there are essentially two ways to make money online through Forex trading. You see, you can make money trading Forex by using a trading strategy that has a low win rate and a risk to reward ratio like 1:2 or higher. However, the lower the win rate of your trading strategy, the more important it's actually going to be for you to have a risk to reward ratio that is greater than 1:2 or 1:3, for example. A lot of Forex traders use this trading methodology to squeeze profits out of the spot Forex markets on a consistent basis, but that doesn't mean that this is the only method you can use to make money online through Forex trading. On the flip side, you can also make money online through Forex trading by using a trading strategy that's got a very high win rate and a negative risk to reward ratio, such as 2:1 or even lower than that, for example. The lower the negative risk to reward ratio of your trading strategy, the more important it's going to be for you to have a very high win rate. Now, believe it or not, there are actually lots and lots of Forex traders that use both of these trading approaches to squeeze profits out of the spot Forex markets on a consistent basis. But after countless years of interacting with traders from all around the world, I found that a lot of traders don't even know that they can make money online through Forex trading with a trading strategy that has a negative risk to reward ratio. Why? Well, it's actually because lots of trading instructors and coaches like myself heavily push the trade with a low win rate trading strategy and a good risk to reward ratio approach to trading without giving them a glimpse of the other side, which is squeezing profits out of the Forex markets using trading strategies which have very high win rates and negative risk to reward ratios. So long story short, most of the Forex trading strategies you're going to find out there are designed in such a way that you're actually going to be risking a certain amount of your trading account's capital in order to make multiples of that amount. So for example, let's assume you're using a trend trading strategy that relies on finding pullbacks for entries. So for this particular chart which I'm using as an example, this might have been a trade setup. We're in an uptrend and price pulls back into this moving averages. So you might decide after the formation of this bullish engulfing candlestick to take a long trade setup, putting your stop loss somewhere below this swing low. Now, the way this works is you might decide to risk 1% of your trading account's capital and go for a profit of maybe 2R. That's 2% of your trading account's capital, or maybe even 3R. Bear in mind that this is an example. So the way this works is you're actually risking a certain amount of your account's capital in order to make more than that, which automatically makes it that your winning trades are going to be much larger than your losing trades. So because of this, what you're going to find is that these trading strategies, even if they have a low win rate, you're going to end up making profits with them because the average profits you're going to get from your winning trades are going to be more than enough to cover for the losses you're going to incur from your losing trades. So even if you have a 40% win rate or a 50% win rate, you'd still end up making money with this type of trading strategies. Coaches like myself and also trading instructors and whatnot heavily teach these trading strategies to most of the struggling traders they work with. In my opinion, the reason behind this is simply because when you're trading, you really need to accept the fact that you're going to encounter losses. So if you're trading with strategies that have a positive risk to reward ratio, such as risking 1 to make 3 in this particular example which I showed you, you are going to be much more at ease while also trading stress-free, because even if you encounter losses, you know that because of your risk to reward ratio, which is positive, you would end up having trades, just 1 or 2 winning trades, which would make up for a handful of losing trades. But one thing that a lot of traders don't even know is that you could flip the switch and use trading strategies which actually use negative risk reward ratios. For example, you might decide that, okay, I'm going to be taking this trade, but instead of going for a 1:3 risk reward ratio, I'm going to be going for 1R while risking something like 3R. This is a negative risk to reward ratio. When you make a winning trade using this type of approach, that winning trade is only going to give you like 1% of your trading account's capital, depending on what value your R multiple is. But on the other side, you're actually risking 3 times the amount you make from your winning trades as your stop loss. So by virtue of having this type of trading strategies with good edges, what's going to happen more often than not is that your win rate is going to be very high. But the problem with this type of trading strategies is that only one losing trade will wipe out the profits from 3 winning winning trades if you're using something like a 3-to-1 risk to reward ratio, which, as I told you now, is a negative risk to reward ratio. If you're a trader who is much more comfortable with taking winning trades often because you don't just like losing, this type of trading strategies might just be the strategies for you. If you have a good edge, you're going to have a high win rate and you're going to end up making money. But the only downside to this is that one losing trade is going to set you back the profits of 3 winning trades. But on the flip side, if you're a trader who doesn't care about having winning trades more often or whatever, you can go for the trading strategies, which is kind of like the norm in the industry, where you'd be risking 1 to make something like 3 or 2 or whatever. That's a positive risk to reward ratio trading strategy. A lot of traders don't know that this option actually exists, where you can even trade with a negative risk to reward ratio. We always think that you have to be risking 1 to make 10 or whatever the case might be. But here's the thing. Passing prop firm challenges is one thing, and being able to consistently squeeze profits out of the Forex markets on your funded account is an entirely different thing altogether. If you'd like to make money through Forex trading on a consistent basis, then you're going to need to take your trading skills to a whole new level. And that's why you absolutely need to watch this Profitable Forex Trading Blueprint series, which is a crash course designed to help you become a consistently profitable Forex trader in a step-by-step manner. Just click the video on the screen now to get free instant access to the crash course.